Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome into the Friday, December 10, 2021 Market Plus. Joining us and continuing our discussion from the office in Florida is John Roach. And John, I always like to talk about the weather with you. As we record right now, there is a good snowstorm to our north. But I will tell you, we're looking at we had 60s this week. We could have 60s and 70s next week. Huh? Want to move back for that? No?
You're going to have a chance for a white Christmas? The people down here would love to have a white Christmas.
Well,
but we just assume you keep it up there.
Yeah. Well, I think a lot of people here would like to have it. They just haven't had it yet. Well, give us time. We wrapped up, and I won't say avoided. I wanted to save part of this discussion for this Market Plus segment. I want to talk about inputs. And I'm going to start with a question that we got. Dan in Chicago, Illinois, is asking us via Twitter. He says, can we expect input prices to correct by spring? Are suppliers committing to purchasing inventory themselves, or are they too waiting for a correction?
I can't tell you about the suppliers, but I can tell you that everything I read says fertilizer prices are going to continue to be very high all the way in through the spring. We've had recommendations out for some months to be booking fertilizer forward. There's some fertilizers we're not, but most we are. We think prices are going to be high, and we think that the commodity prices will justify these higher price levels.
Well, do you see that tied to a demand issue, or do you see that too with natural gas? I mean, natural gas has fallen off a little bit. That's one of the key components in some of this fertilizer. Does that have anything to do with your projection?
Well, I think it's a combination of very strong demand. Really, you have to think about fertilizer as a worldwide product, and grain prices are high all around the world. And so every producer that it can afford to purchase it and can get it will want to fertilize this year. And so I think that side will continue. And I think the supply side, I mean, we're getting down to fewer and fewer suppliers. And so the control is resting in fewer hands, and some of them we're not very friendly with.
Well, so it goes back to what I started off with, talking about the weather. I have seen a lot of pictures from a lot of people on Twitter, Facebook, that have been doing some fall field work they didn't think they'd get to do, disking things in December. Do you see that maybe we took care of some of that demand for spring here in the fall?
Definitely. I think we can move a little bit here into the fall of the year because we're able to get field work done. But don't think that we're going to move enough of the demand to cheapen prices for spring.
Good idea. Good point. Good to remind. I got another question about fertilizer. This one's a little more specific in another region. Eric in Mobile, Iowa, asked us via Twitter, how will tight fertilizer resources likely affect the South American crops harvested in 2022?
The crop that's harvested in 22 is already planted or in the process of being planted. And of course, the corn crop, the biggest part of the corn crop in Brazil, is a second season crop. So it won't be planted until out in February, March, maybe some a little sooner than that. But that fertilizer has already been purchased. Remember that a lot of producers will contract forward percentages of their crop, so many sacks of grain, and they turn around and they use that contract to buy the inputs. And we saw that happening actually some months ago, or started happening some months ago. So the fertilizer situation in South America is not as tight as what you might think.
All right, let's talk inflation now. Shane in Bloomfield, Nebraska, asked us on Facebook, is $5 corn the new $3.50 because of inflation and newly printed money?
I don't see us going back to $3.50 corn unless we really get into some unusual times. I think the market, I'm not sure whether 5 is the bottom of the market. We may have something lower than that, but 350 I think is too low. And we're trading a lot. We're spending a lot of time here in the almost $6 price range right now. We'll have some $6 opportunities here if we do today, and we have a corn sell signal. So we think that growers who are holding on to bigger inventories than they're comfortable with, you'll want to be selling some of that inventory out. We'd like to get some sold on South America's weather concern, which there isn't very much concern, but it's the weather risk period. And then we'd like to have some for the North American weather concern period. You have to balance out how much do you want to hold around until next late spring, summer, and how much would you rather turn into cash prior to that. Remember, we have the biggest crop in the world on soybeans that'll be harvested between now and then. So you'll want to be getting some sales made, and so you can go through the South American harvest without losing a lot of value.
There's another leg to this discussion, and it involves the country of China. Phil in Dresden, Ontario, asked us about China. A couple of questions here to think about, John. How robust will Chinese demand for agricultural commodities be in 22 from both the U.S. and Brazil? Or have we hit the high water mark last year for this demand? Surely diplomatic boycotts of the Olympics aren't a factor. Or does this Chinese demand last into perpetuity?
I think Chinese demand lasts into the future, that as far as I can see anyway. Remember, we kept waiting for the Chinese demand to finally ratchet up to the point that they couldn't produce enough to supply themselves. And for a long time, that was simply soybeans. And then we saw them buy some wheat. And we've seen them buy corn, and now we see them buy solid buyers of corn. So I don't think that changes. Now, political things can get in the way, and people get mad at each other, and maybe something changes on that side. But if we don't have that kind of disruption, I think demand continues to be robust from China. They've been very active buyers just this week.
All right, let's switch to crude, another C word, but I want to have you define the word contango.
Contango means that the price of something tomorrow or next month is worth more than it is today. And that's you make an assumption that if I have to hold today's supply and for a month, I have a holding cost, and that's the contango. And sometimes we see the market invert, where the nearby becomes more valuable than the distant, and that's a sign of demand, strong demand. When you have contango in the market and you have the deferreds considerably higher, that's a signal that we have adequate supplies.
We're having a little bit of that situation in the crude oil market. Why is that important for me to care about if I don't have an oil derrick on my property, but I do have some corn?
Well, it shifts over energy that we get from corn, we call ethanol. And so if the demand is there strong for gasoline, for petroleum, then that means that we have a strong demand picture for ethanol. And that's what we have today. We have ethanol producers crushing corn and with the biggest board margin, or nearly the largest board margin that we've seen. So it's very profitable to be in the ethanol business. And that means very strong demand for corn until that changes, and strong basis levels, and that's what's setting our price level right now.
I want to close with this, John, and I want to talk transition. During the broadcast, we had a piece talking about farm transition. Beth Hoffman is an author. I only pulled out part of a much longer discussion that'll release on Tuesday. I pulled out the part about transition for a reason. We're coming into the holidays, and I even mentioned it. I kind of prefaced it. We're going to have, we like to think that we're going to ask, what'd you get for Christmas? But we need to have that discussion about what's next for the farm. You've had that discussion in your business, family business. You've helped people, and you're talking about it with people. Give me a little bit of what you've done through Roach Ag.
We started a new business, actually. where we're looking at taxes and we're looking at farm succession. One of the things that happened that we had renewals that didn't renew. We had customers that didn't renew, and we started investigating why were we having. Well, I got into this business at a young age, and now I'm 72, and our customers are also in their 70s, a lot of them, and so we're losing customers because they're retiring out of the business. And the questions that we've been answering now for really some years are transition questions. I have a son who's on the farm working, and they're actually trying to think their way through the future and what they want to have happen and how they want to keep the farm in the family. It's different from other businesses. Most businesses, when it comes time for dad to quit, they sell the business because there's nobody in the family that's necessarily wanting to run it. In agriculture, we've found almost no one that wants to sell the farm. And so if that's the case, you've got to start planning for it. And when you're in your 70s, it's too late to do much planning. You just have to react. So what we're really trying to do is activate our subscriber base to get involved in farm succession at the age they are today. If you're farming and you plan on farming and you want your family to farm, you have to get it down on paper. You have to figure it out, because otherwise, when mom and dad decide to quit farming, there's no money for them to live on. They have to take the money out of the farm. And if that's the case, then Junior, who's farming, suddenly has to pay for mom and dad's retirement plus pay for a brand new farming operation, and there's not enough money, let alone for the kids that are off the farm and working in town. So we see this as a growth area in our business, and we're focusing, and we're lucky being here in Florida. There's a lot of people here that deal with old people.
There's retirement is something that happens in that state, I've heard, or
exactly.
people move
and
there.
So some of the very best service people dealing with estate planning and tax planning are right here in Florida. And so we've had the opportunity to be involved with some people in our own business doing this, and we see this as an area that we want to focus in on. Right. I'd like to think that I can take my career and take it the next step, which is helping farmers keep the farm in the family and provide for everybody.
Well, thank you for being in our Market to Market family, John. We've always appreciated it.
Thank you very much. I appreciate it, Paul.
All right, good to see you, John. That'll do it for Market Plus. Next week, we take a look at a dairy that's been navigating the pandemic by helping those in need. And Naomi Bloom will analyze the markets for us. Thank you for watching. Have a great week.